Hey everybody, welcome back to Focus to Fit Financial. I am Dustin here with you for another week. I really appreciate you coming back each week when I see one additional subscriber and see the viewing hours kind of tick up a little bit. It really fills my heart to know that I am serving somebody, even if it's just one person. So thank you so much again for continuing to watch my videos, whether it's a minute of it or the full thing. I appreciate you being here. Thank you very much. Today, we're going to go ahead and we're going to talk about mortgages, or rather, mortgage interest rates. Long time ago when I first got started, I actually talked about whether you should pay off your mortgage or not. If you haven't seen that video, go back and look for it, whether you should pay off your mortgage at 15 years or at 30 years or whatever. So go back and check that out. But today, we're going to talk about mortgage interest rates. What does it look like to have a 0.5% difference or 1.3% difference in a mortgage interest rate? Where if you would have bought a home last year versus this year, maybe this isn't for you. Maybe you have a kid that's that's older and grown and looking at possibly getting a house for themselves. Maybe you're looking at a second home. Maybe you're looking at an investment home. Maybe you have somebody in your inner circle that's thinking about getting a home. What can it look like for that just small percentage difference? 0.5% doesn't sound like a whole lot, right? When we look at it from investment terms, we just go, that's not a whole lot. We go 1%, not a whole lot. Especially when we consider like your banking account, checking account, savings account that has that very itty bitty percentage, right? Doesn't seem like a whole lot. But I'm here to help you crunch numbers. By no means am I a financial advisor. I'm just a financial coach, a guy that's interested in numbers and crunching things and wondering what does this look like? What happens if you do this or that, right? So that's what I'm here to serve you and help do. So with that, let's go ahead, let's dive on in and take a look. Actually, let me go ahead and go to this website real quick. So last week, it's showing right here, last week alone, it was at 3.94%. Today, we're at 4.2%. That's a difference of 0.25%, right? Increase in the matter of just 1 week difference. If we want to look at the last 12 months, okay, so this is kind of right on team with that 30-year fixed. Last week was 3.95. If we go back to just 6 months ago, it was at 2.95, and you can see all these threes, right? All these threes. But then February of last year, 2.96. So that's where we're going to be using our numbers of last year to this year. All right, so that's what we're looking at here. Of what would be the difference there? Let me go ahead and get this. Like I said, I'm still learning how to get all this stuff going. So. Anyway, so taking a look, there we go. Taking a look here at loan terms, loan balances. If you had decided that, hey, I wanted a house, $250,000 value, that's what it's marketed as, you're going to put down $25,000 as a down payment. That's 10% down payment. You're still going to have PMI and stuff like that, but if you're doing that one, you're going to have a loan balance of $225,000, okay? If you had an interest rate of 2.95%, whether it would have been back in August or February of last year, and you started getting a house going at that time, you might have had a monthly payment of about $1,422. Then, if you look at today, 4.25%, we have $1,587 would be your monthly payment. That's a difference of $165 every single month. That you're going to be paying by having just waited 6 months or maybe the year, right? And you're paying that each month. That's a difference of 1.3% for this particular example. So I didn't go and figure out the entire 30 years. I just ended up kind of calculating, from year 1 to year 15, what would interest you have paid over the course of that 15 years? And so with the 2.95%, you would have paid roughly about $81,000 in interest, okay? That's just making your payments on time, not making any additional principal payments, things like that. For the 4.25%, you would have paid $121,000 in interest in just the course of 15 years at the 4.25%. That's a lot of money. That's a lot of interest that would be paid, right? That's a difference of $39,748 in just a 15-year time frame of a 1.3% interest. Is that a lot of money for 1% difference? For 1.3% difference, is that a lot of money? I'd say, yeah, that's a lot of money, right? That's money that you wouldn't have had to otherwise pay if you would have jumped in when the interest rate was lower. Does that mean that you missed the ball? No. Are home values always going up? Yes. Are the interest rates going to go down? I don't know, right? Are they going to continue to go up? I don't know. With inflation right now, it's looking like it's probably going to continue to go up, right? So taking a look at that though, we want to look down at the 30 years because maybe you're thinking $350,000 home, or like we talked about those other people that you might know, $350,000 home. If it's an investment home, it's a rich home. I wouldn't go that far for an investment home. But let's talk about this for those that might be using it for themselves or family members, right? $350,000 home value. You put down just 10%, $35,000. That brings the loan balance down to $315,000. Same interest rates. These are your monthly payments. That's a difference of $230 for that 1.3% difference, all right? And so that gives you a difference of $55,645 difference after 15 years. So would you exchange $55,000 for 1.3%, right? Let's take a look at it from an investment standpoint. I like to think about it from that standpoint. If I would take that money, are you going to really know, oh gosh, hey, 0.5%, is going to be $230 difference? No, I mean, you can kind of calculate it, but you don't want to necessarily wait on that either. But what we're looking at is if you would have gotten your loan 6 months ago and you would have invested an additional $230 a month, and over the course of 20 years, you'd have an extra $175,000 in your bank account, right? In your investment account. So, but you also would have saved this $55,000, right? So that's the $230 per month if you invested it. If we look at the $165 per month difference as well, you would have saved yourself that $39,000 headache over the course of 15 years, but you also would have ended up having $126,000 in your investment account. So those half percents, right? Those half percents, those 1%, they do make a big difference. And we're just looking at a matter of 1 week, there's a 0.25% difference, right? So if you just look at these numbers and you just roughly take a quarter of it, it's not going to be exactly the same, but you just quarter it, that'd be like, with this right here, and you just take 25% of that, that's a significant chunk of money right there, right? That's $10,000 about. So $10,000 from just a 0.25% difference in the matter of 1 week is what you're going to be paying out. So I say that to say, if you're thinking about getting a home, or somebody that's contemplating getting a home, we don't know if these mortgage rates are going to continue to go up. If you're thinking about refinancing, right, your interest rates are climbing as well, so you should have gotten on it. But something to just kind of think about, because over the course of the last year, it's just kept going up and up. It started out at 2.95, and now we're up to 4.25. So get on it, get thinking about it. So if you are still sticking around with me, if you've seen this full video, thank you so much. It just really does tickle me when I have people like you that are watching it. I'm hoping that I'm serving this community here online. And as I get better down the road and do this a little bit more and more, I really look forward to serving a lot of other people, helping them make some good financial choices as well. So thank you so much for being here. Thank you for sharing it, liking it, subscribing it, whatever you have done to this point. Thank you so much. And I look forward to bringing more videos to you over the course of this year. All right. With that, I just want to tell you, God bless. Go believe it, that you will receive it, and God will definitely bless you. Have a great day, and we'll see you next week.